Hey guys, how's it going? Welcome back to another update of my Canadian dividend investing portfolio series here on YouTube. It's been about a week or so since I've been here, but I've just been busy. And yeah, I was just kind of hiding from the stock market for a little while, and it seems to be recovering, maybe. Um, don't trust it though, so who knows? So I've just been proceeding cautiously, anyways, depositing a little bit less than usual and kind of riding it through and see what happens. So my stock value at the moment is sitting around $77,029. I'm up about 5,000, which is nice to see, about 7.06% overall. That's way better than it has been in the past weeks, but way lower than it has been previous to that. And most of the stocks that I have are dividend stocks with an average yield of 4.13%. That's a weighted average, so that takes into consideration how many dividend stocks I have at each different yield individually. But basically, altogether, they are. I'm expecting to get around $3,181 per year in dividend payments just from holding the stocks, whether or not the stock price goes up or down. So the whole portfolio value can bounce around and do whatever it wants, but pretty much it's very likely that I'll actually get this. This is the forward annual dividend. And that is comforting to me to know that even though, yeah, the stock market's totally crazy, that I'm looking at a pretty solid guaranteed, like almost guaranteed income that's passive because I don't have to do anything. I just sit here and collect the checks. So that's pretty much, that's pretty nice. That's what I like about dividend investments. And it helps you kind of get through the stock market. So anyways, I'm going to run through basically what I did this week. And when I did 3 actions, I made a deposit, I got a dividend, and I bought some stocks. So I'm just going to run you through what I normally do to track these things in the spreadsheet. And if you're interested in the spreadsheet, there's actually a link in the description below where you can get it. So you're going to see exactly what it's like to use it for most of the major actions, really, that you would be performing. So I did make a deposit, so it's a little bit out of date, like it's not currently up to date yet. I had a little bit more before I bought the stocks. So I just got to go into the deposits tab and just log the deposit that I made. So it was in the tax-free savings account. I did deposit $200. It was in Canadian funds, and I put that through on May 25th, 2022. Okay, so if you do that, you're going to see that the cash has gone up to reflect, what you're tracking here, but it's only as smart as, the information you tell it. So I also did get a dividend that I have to record. Actually, before I log it, just take a look here. Before I logged it, the May dividends were $153. But I did get one in here from BMO, and that came through actually on May 26, 2022, and those guys paid me $11.97. And that was also in Canadian dollars. So I love getting bank dividends because a lot of banks charge you to be a customer of theirs, but if you just buy some stocks, then they pay you to be an owner. It's kind of backwards and messed up, but you're better to get money from the banks than to give money. So anyhow, so basically earlier this week I was sitting around $215 more or less that I wanted to spend on some stocks. And when I was in my portfolio tab looking around in here, I was just kind of, I always filter it to kind of put different metrics, sorted by different metrics. So right now you can see here it's actually sorted to have the biggest holdings at the top, so my biggest positions at the top, and we go down the list in descending order. And I often flip through here and switch it up. I take a lot of different perspectives here to try to understand, like, do I really want to be adding to my biggest positions? Maybe. It depends if they're really strong or not. Or am I trying to balance out the account by buying some of the smaller ones? Maybe, but maybe they're a terrible deal. Maybe they're just going down all the time. So that's just something that's in my mind all the time. Another one that I like to look at is the gain loss. So I put basically the winners at the top and the losers at the bottom. And this is something else that I like to consider. Do I want to be adding more to my winners because are they just on a very strong streak? Or do I want to maybe be picking up some of my losers because maybe they're just beat up at this moment, but I believe that they're going to go up in the future? So that's just something else I consider. And then sometimes I also filter for dividend yield or yield on cost. So actually if we put dividend yield in descending order, we see here that some of my my highest yielding stocks are over 6% at the moment, and as we go down the list, this decreases down all the way to 0 for a couple of the positions. Now, earlier this week when I came in here, the market was more beat up earlier on, and I was actually looking at smart centers And because the Smart Center's price was a bit lower then, I was actually technically in the red when I bought them. I was like down like 0.5% or something. And I was looking at a dividend yield that day of around 6.4%, which is massive. That's higher than that ended up being my yield on cost. But the actual dividend yield earlier this week when I bought them was, sitting around 6.4%. And something to know about dividend yield is this number changes all the time. This number is based on the stock price. So what Smart Centers has done and all these companies have done is this is their forward annual dividend. And this is basically the amount of money that these companies have agreed to, or like have set out as a goal to pay the shareholders per year per share. So I have 98 shares in Smart Centers, and each of those is going to pay me $1.85 per year for holding them. So that's the number that they actually decide as what to make the payment, and then to get the yield, they just divide that number by the current price. So if the current price goes down, then the perceived yield will actually go up, and if the current price goes up, then the yield would go down, assuming they don't actually declare a different dividend. So that's something good to know. But anyways, at the time, just given that the market is so sketchy, I thought, you know what, this is a good opportunity to buy more Smart Centers. It's been quite a long time since I bought them, and usually I'm actually chasing after these companies that are more in the red for me and beat up. But I thought it's very rare for Smart Centers to be a red one for me, and it's very rare for me to buy a dividend stock that's paying over 6%. So that was a no-brainer for me. I had like $200, and that's exactly what I did. So I logged the transaction here in the Transactions tab, which is a master list of all of my purchases and sales ever made. So I just come down here to the bottom, and I just got to log exactly what I did in my broker. So I made a purchase of SRU.UN. That's the ticker for Smart Centers, formatted, for Google Finance. And I made this purchase on May 25th, 2022. And I actually bought 6 of them at a price of $29.05. And I did not pay a trading fee in Canadian or US dollars because I use Wealthsimple Trade, which is a really nice broker to be using in Canada, and I paid in Canadian dollars. So I always check that this number, which is automatically calculated, matches what I also paid in Wealthsimple Trade. If it's not matching, that means that I've put a little mistake in here, so it's a good check. But yeah, once that's logged, then my portfolio, my whole sheet is totally up to date to this moment. And actually I have $40 left in the account. I probably could have bought one more share, but maybe I'll just spend that next week or next time. But really what I'm most interested in here is this number. So at the beginning of the video, I was expecting to receive around $3,181 per year in my dividend income, and now this is increased to $3,192. So that's an increase of about $11 per year in totally passive income from dividends or like REIT distributions. It's basically the same thing for our purposes. And I just like to see this number keep on growing and growing and growing. And actually, like I said, if we take a look in here at portfolio for Smart Centers, I actually bought them a few days ago when they were down about 0.5% from my average price, and now we're up about 1.75%. So actually in the short term, my net kind of worth or value in this position actually went up over 1.5%. And so that's really nice. So that's just a boost to my overall portfolio value, as well as increasing the annual dividend income. So that's the goal. You want to increase the total value of your portfolio, and you want to increase your passive income if possible. And it's up to you as an investor which one you want to decide to prioritize more. And that's part of the fun. You can make those decisions yourself. And everyone is going to have their own strategy and their own goals. So guys, if you watched this far into the video, thank you very much. I'm glad you like this kind of stuff, and I hope you learned something interesting, or at least found it, cool to get some insight into, someone's actual portfolio that's buying and selling these dividend stocks in Canada. So guys, I'll see you down in the comments and in the next video.